Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. First, let us look at US markets. European markets are very weak. Asian markets are also very weak. And when European markets are weak, Dow or US futures are always lower. And then, comes some data in the evening. Yesterday, the retail sales data came. That came better than expected. So, retail sales data come better than expected means, the rate cut may be delayed. So, because of that, the markets fell. But however, the markets were very, very choppy. But, at the end of the day, it was only a moderate fall. And now, the Fed rate, will they cut the rate by March? There are 64% chances was there about 2 days before. Now slowly it is coming down to 56%. So now there is only 56% chance that Fed will be cutting the rate. So that is the reason why bond yield is going higher and then markets are also coming down. But despite market coming down, the US markets are looking resilient. 3 straight days of fall, a little bit oversold, but S&P 500 takes support around 4740 to 4750. I think this is the third time it has taken a support and recovered a little bit. Asian markets as usual mixed, some in green, some in red, so as usual. Coming back to our market, the most important thing, HDFC Bank ADR was down 9%. Number one, HDFC Bank results came, the results were not good, that is understandable. And because the results were not good, markets fell, that is understandable. And HDFC Bank fell 7% in US ADR and then here it fell about 8% plus, that is understandable. When a bad result comes, markets are pricing in the results. So factoring in the results. But why all of a sudden yesterday ADR has to fall 9%, which is more than the day before yesterday. So that looks really puzzling. Maybe one conspiracy theory is that, so there is a bear cartel, want to make sure that, Indian markets are down around this time and they do not want the market to go higher. So it's a very big people's game, could be a bear cartel. So that's one hypothesis. But however, there is another theory. If you are looking at positively, FIAs can invest in a company only to some percentage. I think the standard is 24%. Then, company to company, it differs. I think HDFC Bank is about 50%. Right? So, FIAs are always fully invested in HDFC Bank. And because of that, other FIAs who want to buy the HDFC Bank shares, they cannot buy in India. So, they used to buy it in US ADR. So, that is why the US ADR, it was always trading at a premium. If you look at Infosys, ICICI Bank, Wipro, they all will be trading at the same price, but HDFC Bank used to trade about 8 to 10% premium. Probably yesterday with this 9% fall, that entire premium has been completely wiped out. At yesterday's closing price in US is almost same as yesterday's closing price in India. So, since HDFC Bank has fallen 7% day before yesterday, it fell 8% here. Yesterday there 9% fall. It doesn't mean that today HDFC Bank will fall 10%. But however, people may not understand all the theory behind all these things. So they may start selling in the beginning. So definitely there will be some panic in the first 15-30 minutes, especially today's weekly expiry. So there will be a lot of, panic. Probably now some FIAs are thinking because the results are not good, so some other FIAs who are holding the HDFC Bank shares, they may start selling. So we can buy from them directly in Indian market. Why should we pay premium to US ADR? So probably that could be one thing. So this HDFC Bank has been a big problem for the last 2-3 years. Ever since they started announcing the merger, it has always been a problem, HDFC went from 2200 to 3000, then came to 2200, all over the places before merger itself. So this, in my opinion, they should not have done the merger. So this is creating hell lot of volatility, and that too on a stock that has the highest weightage in India. Anyway, so we have to live with this volatility. So GIFT Nifty, as expected, indicating another 125 point gap down. Already Nifty future is trading around 25 point discount. So at least initially the things will be very, very bad. But however, yesterday FII is selling of 10,000 crore and global markets are not good. HDFC Bank ADR down 9%. So all this. Yesterday, in fact, I told you, result came, markets fell and news has been factored in, so the further downside may not be very high, the markets may consolidate. But looking at this 9% fall in US ADR, my logic has gone completely wrong. So markets are like that. Sometimes they are irrational. So we have to keep watching the HDFC Bank, but when HDFC Bank may be falling, but other stocks may try to recover. I think we are a bit of oversold. There is nothing that was so bad in India that warrants a fall similar to coronavirus fall. So there is no need to look at the open interest and this and that. 21,700 and 800 are having a huge open interest. And there was a decent premium also. So that's why, the people would have sold heavily. Markets may fall initially, but they may recover later. So that is my view. And after a long time, after many days, we are looking at some slight green ticks, even in European futures. Right now, Germany future is slightly higher, just 1 point. Dow future and S&P 500 future is also slightly higher. And I think, European markets are also a little bit oversold. If any good news, but that's the problem. There is no good news. Yesterday, UK inflation came higher than expected. So if there is any good news, there can be a good short covering rally in those markets. So, until then, we have to live with this volatility. Now, along with the global markets, so we have fallen and now we are down to negative for the year 2024. I think December expiry was around 21,700, 800 like that. Now we are far below that. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.